Marci McGregor, I know this is stealing our thunder in some respects right now, but and look, the market's been pretty resilient. You know, there are a lot of headwinds today, and you could point to 3 or 4 different ones, but yet we're kind of hanging in. What's the message there?
You know, I'm actually a little surprised by this market, both yesterday and today, that with the data showing inflation was actually cooling pretty rapidly, that the market didn't get more of a rally. I think that shows lack of conviction. Between now and Memorial Day, it's going to be all about the debt ceiling, because when Congress heads out on recess, that's the real deadline, earlier than Janet Yellen's June 1st deadline. So I think this is all about uncertainty ahead of the debt ceiling, but the market's hanging in. Both parties are still talking. They're still making progress. So I think that's a positive sign.
Are you worried about the debt ceiling impact on the market? And at what point does the market truly care?
So I think it's exceedingly unlikely that we have any sort of issue around the debt ceiling. We have to remember the debt ceiling's been raised or amended over 100 times since World War II. But you may get some volatility here over the next few weeks. I think that would be a buying opportunity for clients that have it a 2 to 3 year time frame. What I don't to kick the can down the road, so we deal with this again in the fall. So I think you get a deal with this before Memorial Day.
Oh, wow. So you're a dip buyer, right? Because we just had a technician from JP Morgan suggest that we're going back to 3,500 of the last fall lows. You don't see that transpiring?
I think we have a choppy few months ahead of us, but it's all about your time horizon. If your time horizon is 2 to 3 years from now, I think any volatility, call it around the debt ceiling, or I think over the summer, as data starts to really confirm that the economy is slowing, I think you get some more kind of cuts to EPS estimates. That's an opportunity, I think, again, for long-term investors.
And you like the U.S. over anywhere else in the world, despite some calls for an opposite strategy.
Yeah, I like the U.S. right now, and I keep coming back to the Fed. The Fed's a lot further ahead in their fight against inflation. If you look at Europe, ECB, Bank of England, they're earlier in their hiking cycle. So on paper, that makes me like the U.S. more. Now, on my shopping list for when we start to pivot towards recovery is likely emerging markets. You know, we all know about China's reopening and consumer story, but I think there's an investment and a credit cycle that's starting there that I think could be really interesting, again, once this cycle starts to pivot.
Marci, I appreciate having you as always.